So I don't actually have a PowerPoint. I'm going to go live. If you guys are cool with that, I want to share with you, and I don't even know what you trade. Are you guys trading stocks, options, futures, Forex? What I'm going to try to do, well, not try to do, I am going to. I'm going to show you a way to use market internals to time your stuff for better entries and exits. And that's going to help you with futures. It's going to help you with stocks. It's going to help you with options. It probably won't help you much with Forex because it doesn't have a whole lot to do with Forex, but you may learn something from the other markets. Are you guys cool with that? I mean, I'll go live and I'll just do all live charts and I'll show you like some market internal stuff that you guys can use for entries and exits. And I can tell you that I've been teaching a lot of classes on this, and people have been really, really liking the stuff. So let's do that if you guys are cool with that. I know I've over here. Somebody tell me when my thing is up, and I kind of scale it for the right time frame. So first, let me go into. I'm gonna go desktop sharing. Now I got to make this app work, and I'm gonna break down basically how I go throughout the day. So let me see if I can do this. So you should be able to see my screen right now. Can you? Can you see my live screen right now? Yes. Yes, no, maybe. Now usually I draw on the charts a lot, but I probably won't be able to draw on the charts too much, but I'll point out a lot of stuff. Okay, all right, so cool. All right, so I'm going to be talking about market internals. But before I talk about market internals, I want to show you kind of a pre-market routine that I go through. So before I start the day, here are some of the things that I do on a consistent basis that may help you. And it's always good to have a little routine or a ritual that you do to kind of help you out. So the first thing I do is I go over to this website called ECONODAY. Okay, so Econ a day. So do you guys see Econ a day on the? Let me blow up Google here, make it really big so we can all see it. And then Econ a day, and I click right here in the upper left-hand corner on Google. And then do you see here where it says today's U.S. announcements? So if you're going to be trading the U.S. markets, then I'll use this as my economic news release calendar. Okay. Now, if you're going to be trading Forex, you could just use today's global announcements, which is down here, and you can see this is going to give you everybody's country's calendar and what they're announcing and all that good stuff. I usually don't use that one because I'm usually trading anything. So what I'll do is I'll click right here called today's U.S. announcements. I'll click there, and then from there, all right, so now I got a timer. Awesome. And then I know today is the gray shadowed thing. Does everybody see that? So, and you can see what we had today. We had, all right, market focus. We got consumer price index at 8:30. All right, cool. What's that going to be? I don't know, nor do I care. But if I did, I could hit report and go, okay, here's what they're looking for: prior, reverse, revised, consensus range, actual. I don't, believe it or not, I don't really care about that stuff. What I care about is when is that daggone number coming out, and how is the market reacting to whatever that number was, right? Like, it could be a great number and the market will sell off, or it could be a great number and the market go up. You just never know. That stuff's really random in nature. It's what's important is how the market reacts to that economic news release. Did they like it? Did they hate it? Were they kind of just, they didn't even care, right? So we had jobless claims, PMI index, Bloomberg consumer comfort, Philly Fed, leading indicators, EIA natural gas, petroleum stats reports. Everybody see that? So you see the little red stars? That means it's important. And did you also see this little yellow star with a orange tinge around it? That merits extra attention. See the little legend down here where it says market moving indicator? That means the index futures are probably going to move around a little bit. Merits extra attention is yellow. Other key indicators. So now you know you're never going to be blindsided by another economic news release because you now have that. Anybody got questions on that? And so now the second place I go to is we're going to use Google again. Go to your friendly search engine, and then type in this. Type in PROGRAMTRADING. And for folks, I have a thick Kentucky redneck accent. You're going to go to programtrading.com. Okay, programtrading.com. This is going to be one of the things that I'm going to teach you a little bit about today. Okay. Now, the reason I want to do this is because you should know that at any given day, 70 to 90% of the trades on the NYSE are done by computer algorithms, a big bank of computers that go, hey, if ABC happens, execute XYZ. Okay, so we're going to click on. How many people in here watch CNBC in the morning? Does anybody in here watch CNBC? CNBC? You ever see when they talk about the fair value? You ever see that, the fair value? So the fair value, not anymore. CNBC is great for entertainment value, but it won't make you any money. So the fair value is when the cash market and the futures markets get too far apart. And there's this trade that you can always do. You can arb it back together. In other words, if you're doing a fair value trade, it's an arb trade or an index arb trade. So if cash gets too far away from futures or futures get too far away from cash, you can buy one, sell one, and they'll come back together. So what you're going to do is you're going to click on today's program buying and selling levels. You're going to click that. And then once you click that, you're going to scroll down here, and you're going to scroll down to about the fourth paragraph where it says program trading premium execution levels. Is everybody following along? Everybody playing along in the home team here? So once you see that, here's what you're looking for. Our computers are set for program buying at minus 1.50. So somebody write down buying minus 1.50. Okay? Buying minus 1.50. Somebody do the notes. All right? And it's going to be program selling is going to be set for minus 4.10. Now here's what that means. When this number hits minus 1.50, they are going to buy everything, a basket of stocks in the S&P 500, or they're going to buy just a boatload of S&P 500 futures or E-minis, okay? When the sell signal comes at minus 410, they are going to sell a basket of everything in the S&P 500 stocks, or they're going to sell the S&P 500 futures or sell the S&P mini futures, okay? So now we write down minus 1.50 and minus 4.10. Now I've got to move this to update my charts, okay? So now on TradeStation, I'm going to go over here and I'm going to open up this chart. And it's a little bit different for only S&P. Well, you can do it on just about anything. It's going to work good for Dow, S&P, NASDAQ, or Russell. So what I'm going to do now is I'm then going to take this horizontal line. I'm going to take this horizontal line, and I'm going to place that at minus 150, okay? And then I'm going to place the program sell at minus 410. Everybody following along so far? I know I talk fast and I have a thick accent, so I'm going to try to slow down just a little bit. Does everybody follow me so far? Now, the symbol that I'm going to place this on is cash sign ESINX. All right? This is for TradeStation. It's going to be cash sign ESINX. For TOS, you're going to use stuff like this. It's going to be /ES-SPX. And for the others, I just don't know what they use. Okay? Now, once we've got these set, I do have to tell you a few things before I turn you loose because it'll hurt you if you don't know. You're going to throw out the first 3 minutes, at least the first 3 minutes. So there's the first minute, there's the second minute, and there's the third minute. Do you see where I've got it highlighted? So you're going to throw out the first 3 minutes. You let this thing get in the pocket, and then you'll notice that right here, you got a program sell. You see that right there? Where I'm gonna put these arrows on here for you, okay? So this is a program sell, okay? This right here is another program sell. All right, I'm gonna put this one right there on top of that one. Oh, but looky here, you got a reversal signal, and then you had a program buy. That's interesting. And then, oh, looky here. Well, I'll be daggone. Look, you had another program buy, and then you had another program buy there, and then let's see if we've had any more here. Oh, look here, got another program. You got another program buy right here. Program buy right here. Now I'm going to remove this line because you don't need this moving average on top of here at all. Let me remove the line because it does you no good at all to have that on there. Remove, close. Okay, now, so here's what you're going to do. When you see a program sell happening, what kind of chart is that? This is just a bar chart, a high, low, open, close. You can use a candlestick chart. It's really not going to matter. Then I'm gonna scrunch this down, and everybody should be able to see it all at once. So according to the program buys and sells that happen in real time, there is no real lag effect. This is real time. For toss, can I repeat the symbol? We'll just look up, man. It's 4 lines. It's right above your head, /ES dash SPX. So this is a program sell, program buy, program buy, program buy. /ES dash, or it's probably this. Hold on, ES dash. No, I think that's it. I think that's right. You might just have to be permission for it. It might be ES dash. I think that's it. Does anybody else use it on toss? I'm not a huge toss user, but I know everybody else that uses toss. That's usually it. /ES dash SPX. I believe that's it. You just have to be permission for it. Type the symbol, please. You got to be joking, really. There, everybody else is typing it for you. /ES dash SPX. For TradeStation, it's this. $ESINX. There you go. That's for TradeStation. Yes, it is. Yes, it is working. There you go. All right, cool. So if it's not working for you, you need to call TOS and get permission for it. So now you're sitting there going, that's great. We now have some program buys and sell numbers. What do we do with them? Now, this is going to work really good in the Dow, the S&P, the NASDAQ, the Russell, or what else would that work for? What else would this strategy work for? It'll work really good for anything else that moves with that market. It won't work with gold. It's mainly Dow, S&P. It's going to work better on the Dow and the S&P, but it'll also work on the NASDAQ and the Russell. Okay. Now, also, if you're in a market proxy stock, in other words, something that moves with all of those indexes, then it's going to move your stock up, right? So if you're in something like Amazon or Google or Apple or any of those things that kind of move with, like, all the ships rise with the tide, right? So you're probably sitting there going, well, that's great, Hubert. Well, how does it work? Let's go see how it works, okay? So I will go over here and let me compare. I think I can do it right here, ESINX. I just have to change my numbers really quick down here on the low side. And then I'll use the @YM. I trade the YM more than I trade almost anything else. @YM.D, okay? And does anybody remember from memory? Let's just change this really quick. I'm going to go right click. I'm going to go right click and I'm going to go format ESINX. I'm going to change it to a bar chart and I'm going to put those exact same lines on that I was doing earlier. Okay, so I'm going to do high, low, open, close, and then I'll just make these colors. We just make them orange. That's fine. Not a big deal. Okay, and then I know that on the bottom here, I had a program buy at what? It was -150. So I'm just going to double left click that, and it's going to pop up here. So I'm going to say minus 1.50. Okay, boom. There's my line on that one. Pow. All right, now my program sell is going to be minus, what's the number? Minus 2.90? Nope, minus 14. Okay. Minus 4.10. Okay. Now, what we're going to do is I'm going to scrunch this up. In other words, I'm going to expand it so we can all see it. Okay. And then what we're going to do is we're going to go through here and I'm going to show you whether this worked or not. Now, this is all of our session right here, all kind of condensed, all in one little snapshot. Restore. All right, does everybody see it? It's blown up decent, right? You can see all that. Now, let's go through it, okay? Hubert, the program site is critical to many retail data feeds. What do you make of that? Program trading site is critical of many retail data. I like the website. I'm a huge fan of HL Camp's work, so I like it. So here is your first program sell. So let's walk through this. At this point, you had a program sell. Do you see this right there? Does everybody notice the program sell? Actually, probably ought to make that white in color so you can see it. Let me see here. I'm going to just change it to white just so it kind of stands out and goes through those numbers a little bit better for us. Come on, TradeStation. Let's go bright white. Ding. There we go. Oh, much easier to see now. Okay, so did this program sell work, yes or no? This is the audience participation. So what I'm giving you is I'm giving you a way to kind of know when there's going to be a big bank of computers coming in and buy stuff and sell stuff, and you can make a decision if you want to follow the big boys. You can ride the waves of the whales, or you can go like, I don't believe them. It's crazy. So that one looks like it worked pretty good, right? So what about this next one when you had a program sell here? Did that work? Not so much, but you see the reversal signal that you had right after that? Anytime you have a program sell and then a program buy, when it goes sell buy, it's usually a reversal. Or if it goes sell buy, it's going to go up. Or if it goes buy sell, it'll go down. It's kind of like a crazy Ivan trade. So did this signal a good reversal off of this low? Yes or no? And you can see this right here. I'll even make these lines a little thicker so you can see them. How much of a move do you consider as a success? That depends on how much size you're using and how many ticks you're going for. It's going to be different for everybody. So let's make the weight of these lines a little thicker. And now, boom. Now you can see this a lot easier. Okay. What is the symbol for Thinkorswim? We've put it up about 2 billion times. ES /ES dash SPX. There you go. All right. Looks good. All right. Now let's see. Now we have another program buy right here. Do you see this program buy? Did that work? Yes or no? Did it go higher after program buy? So not bad. Let's take a look at the next one. Here's another program buy. Did that one work? Yes or no? That one's a little iffy, right? It went up a few ticks. It went up from a few ticks, yeah, but it went up from 16,020, and then it pulled back just a little bit, and then kept on going higher, and it's gone higher ever since, right? So what's the theme of the day that you're seeing today? Are you seeing more program buys or more program sells in this little indicator right here, this market internal? You're seeing by far more program buys, right? So you want to stay on the short side or long side or short side today? Probably long side. So here's another one that's close, but no cigar, but it is pretty close. You see this right here? That one was close, but it didn't quite get there, okay, because it didn't execute there. But it was close, but it did not hit. Here's our next one over here, program buy. Did it go higher? A little bit higher. It's been trending. Now, the best time to take these, in my opinion, is from 9:30 to 11:30 and from 2:30 to 4 o'clock. Don't take them right at the close, though. Right at the close, you got a lot of hedge funds swapping up their positions on their portfolios. Don't take it right at the close. So what do you guys think? Pretty cool, huh? Now, you have to update these numbers every day that you go over to programtrading.com before the market opens up. Just go over there, get your numbers, update your lines, and here's what I do. Here's a little trick that I'll do. If I know it's 1.50, what I'll do is I'll know a lot of people follow that site, and then I'll go, okay, if I know it's 1.50, I'm going to make mine 1.52 or 1.53. So I'll lower it down just a little bit. So in other words, I'll front run everybody else looking at that information. I'm not saying I'm front running everybody else as far as like I'm recommending a trade and I got in it beforehand. What I'm saying is this is publicly available information, okay, that there's a bank of computers that are going to be doing this thing. What I'm doing is I just knock it down a tick or two so that I can decide if I want to get in. Hey, it's getting ready to go. Boom. And then I'll put a horizontal line, and then what I'll do is I'll put a audio alert on TradeStation. So as soon as it hits, I'll do alert, and then I'll hear an alert go off, and then in my ears I'll hear something like, I usually do this one because it's the most annoying one you could ever hear. And here's what I usually hear in my headset, and I'll play it to you really quick. Heads up, it's going to be annoying. So right. So if you have any dogs around, or if you don't have a headset like I do, it's going to drive you crazy. But I know immediately as soon as a program buy or sell hits, boom, and I can look at it and go, okay, do I want to go along with this? Yes, I do. Get along. Okay. If I want it to go short, same thing. I just look at it and I go, okay, there's a program sell. I need to get short. Okay. All right. So that's one thing that you can use for program trading is buy and sell areas on the Dow, S&P, NASDAQ, and Russell. So any questions on the first market internal that you're going to use to keep yourself on, number one, the right side of the market, and or on nice little momentum moves in the futures market? Any questions on the ESINX? My dog won't stop barking. That's funny. Where do we get those daily numbers? So you get those daily numbers from programtrading.com. Go to programtrading.com. All right. Somebody put the URL up, so I have to quit talking about it. And then you go today's program buying and trading levels. Here, I'll just give you this link. This will give it to you every day. But you do have to physically look for them. There you go. You go to that site, and then you go to this page right here. And then last time of the day again. I wouldn't trade it into the close because you've got a lot of people that are just really just tightening up their position. So I wouldn't do it right at the close. I would throw out the first 3 minutes and then trade it from 11:30 to or 9:30 to 11:30 and from about 2:30 till 4 o'clock. Right before the cash closes at 4. Don't do it from 4:55 on. It'll throw out some weird strange stuff. Let's see. Good question, John Law. Where's John Law's question at? I don't see it. Let me see. Hubert, always program trading. Last time of the day, please again. I didn't see John Law's question. If you want to ask again, works well on Dow, S&P, Nasdaq, and Russell. So let me show you. So let's take a look. We now know what it works on in the Dow, right? Let's take a look and see what it works on in Nasdaq at NQ.D. Let's see if it worked any there. Yeah, worked about the same. You can see you got the sell signal here, right? Sell signal there. You had the same reversal signal there. You had some program buys, here. You had a program buy here. You had a program buy here. Now I moved mine down a little bit, so that's not accurate. It should be 1.50. I moved mine down because I was cheating a little bit. What's the number again? Yeah, 1.50. Let me put it back on 1.50 because I was trying to show you how to cheat so you have even more advantage. Data 1.50, and then hit OK. All right. Okay. Works well down. So was there enough of a move after it shows a buy or sell to make it worthwhile? Yes, there is. There definitely is. No doubt about it. Yes. John Law, was it? Yep. So there definitely is. It depends. Not every signal is going to be great. There's some of them that'll fire off a program buy and it won't do anything. You'll be like, oh, I didn't do anything. And sometimes it'll fire off a program buy and sell and it'll go in the opposite direction. So you do have to pay a little bit of attention. But it's a great way. It is a great way to get a heads up on like, hey, heads up, somebody's buying lots of stuff and the market's starting to move. So you can see that it does work really good on the NASDAQ. Let's take a look at the Russell at TF.D. On the Russell, works about the same, exact same. So you can see all four of those things kind of move together. All right, all kind of move together. Let's take a look at the S&P at ES.D. At ES.D works the exact same way. So there you go. So there's you a free gift. Just on a 1 minute. I use it on a 1 minute because it's the smallest time frame, but it doesn't really matter. I mean, you could use it on a tick chart. You could use it on a 5-minute chart. All you really want to know is when the ESINX goes above this level, it's a buy. Below this level, it's a sell. Okay? So, yes, you could. Alrighty. Let's go to the next market internal that I think will help you trade better. Not think, but know. So if you have never, has anybody ever read the book Reminiscence of a Stock Operator? Buy or sell what though? Well, you would buy or sell the Dow, the S&P, the Nasdaq, or the Russell. You would buy or sell the Dow, the S&P, the Nasdaq, or the Russell is what you would buy based upon the premium buy and sell giving you a buy or sell signal is what you would do. Got it? Okay. All right. So there's a great book that you should all read if you're aspiring to be a part-time trader or a professional trader. It's called Reminiscence of a Stock Operator by Edwin Lefebvre. All right. So it's a great book. If you have never read that, yeah, buy or sell the index, or you could buy or sell the spiders or an ETF. It's a great book. So I'm going to spend a little bit of time and show you a couple of other cool things that you can mess with. One of them is going to be tape reading and order flow. So tape reading is a lost art. It's part science, part art, and I'm going to show you some tips and tricks that you can use to do that. But before I do that, yeah, AKA Jesse Leavenmore, I want to show you one other thing. So we're going to end up on time and sales because time and sales and price action is the most important thing. Before we do that, let's talk about a little trade called a crescendo trade setup because it's a good trade, and I want to show you a trade that you can do. It's an overnight trade setup, but it is a really good trade setup. And this, I teach a whole class on like how to do like market internals to figure out whether the market's getting stronger, weaker, or about the same. And these are some of the components that I go in detail. I want to share with you a trend trade. And the trend trade is called the ARMS index. So what we're going to talk about here is the TRIN, which is the trend. So in this trade setup, what you're going to do is you're going to focus in on, let's go over here to the trend. I want to show you what this looks like. There's levels of importance on the trend. So we're going to compare this on the Dow. There's actually three different trades that you can do this on. One of them works way better than the others do, so I'll show you that one. But I also want to show you a couple of the other ones. They don't work as well. You know what? I don't think I have time to show you all three, so I'm going to show you the strongest one. So on a trend chart, and it doesn't really matter what time frame, TRIN, cash sign TRIN, if you get a close on a trend above 1.50, you're going to want to go long on either the Dow, the NASDAQ, the Russell, or the S&P. Okay? So if the trend reading gets above 1.50 at the close, now here's the rules. Write this rule down. So number one rule, you have to have a close lower than the open. And ideally, you want it to be down, anywhere from 20 to 40 points on the day. Okay, that's the first rule. So let's go find a trend reading that closes at 1.50, and I'll show you what you're looking for. Now, this trade does not happen very often, but when it does happen, it's a really good trade. It's almost like having tomorrow's newspaper today. So here's an example of the one that I said doesn't work as strong or as consistent or as well. You see where this trend reading opened up here at 2.0 and 1.5? When that happens, anytime you get a trend reading at the open that's 1.5, then you'd want to automatically buy that with about a 20 to a 40 point stop loss. So this down here, you see this gap down? You see this trend reading above 1.50? That's an automatic long. That's not the trade setup that we're talking about, but it is another variant of it. So let's go over here, and I'm going to try to find you a trend reading that closed above 1.50. Okay, here we go. This is your first one. Does this thing qualify as a trade? So the trend reading right here, this line is your magical execution line. It's a trend reading above 1.50. Do you see that? What you're looking for is you're going to go long at the close, and you're looking for a gap up the next day. But does this trade, does this day qualify, yes or no, based upon our rules? It doesn't really, because the reason it doesn't is there's the open and there's the close. It basically closed up unchanged, which doesn't mean you can't do it. It just means like, hey, heads up, it doesn't fit your rules, so it may not work. In this case, it's a good example of one that did work that broke the rules, okay? And that's part of trading. So let's go find one that works really, really excellent. And this is part of the power of doing everything live with no PowerPoint. I'm kind of flying without a net, so it's going to either look really good or really bad, right? And that's part of. Here we got one. Here we go. Look at this. So now we're cooking with gas. All right. Oh, looky here. Okay. So is this close? First, do we have a trend reading closing above 1.50? Yes or no on this day here, right here? Do we have it? Winner, winner, chicken dinner, right? Now, did the market close lower than it opened? Yes. Congratulations, you just won the prize. You now get to grow a pair and go long at the end of the day. So what you do is you go long. I'm going to move this right over here. So what you now get to do is you now get to go long right here. You're going to use anywhere from a 20 to a 40 point stop loss, and then you pray to the trading gods or to whatever God that you believe in that please, dear God, go up in the morning so I can sell you on the open, okay? That's the trade. It's called a crescendo trade setup. What happens is the selling gets a little bit overdone, and it kind of gets like a piece of burnt toast, and then the next day, boom, the market gaps up. Can you use this anytime, or is it a 5-minute time frame? You can use it anytime. It doesn't matter. The time frame doesn't matter. It's the actual level above 1.50. I'm just using 5 because it makes it fit on the chart nice and pretty. Any questions on that trade setup? I know I'm going through like 2 or 3 things really fast just because I'm trying to give you as much value as I possibly can. Any questions on that trade setup? On that one, you're going to risk 20 to 40 points on the Dow, which would be 2 to 4 points on the S&P. You're going to hold it overnight and flip it out at the open on the gap up in the morning. I don't have a target. I have a gap open situation the next day that I cut half of it loose at the open. I move my stop to break even, and then I trail the stop. So the close lower than the open on a trend reading, and the trend needs to close at 1.50. Will all the presentations be recorded? Yes, they're all being recorded, as far as I know. All right, so there's two different trade setups. You now have program buying and selling, which you will know more than most people on that, because now you know what the program buying and selling levels are. So now you're armed with a good little mechanism there to kind of figure out when the big boys are placing some big orders and going to move the market. And now you also know when, if you've got a nasty little sell-off, and I'm going to tell you, I did do that trade, but I was definitely scared doing the trade. I'm scared when I do every trade. What am I talking about? It does take some cojones to step in here and buy this when you're going, you want me to do what? You want me to buy the low of the day and it's down that much? Are you crazy? Yes, but with a stop. I'm not telling you just to buy things with no stops. I'm saying buy it, use a stop, and the next day flip it out. So that's your next little setup. Now let's talk about the most important thing that I'm going to try to spend the rest of my time on, which is tape reading and order flow. Now, when I originally started to learn how to trade, the guy that taught me how to trade, I did an old school apprenticeship with him for 2.5 years. It took me about 4 months to get the basics down of what I'm about to teach you. But it could gap down. It could gap down, Brian, but if it does that, you have a stop in place and you just lose your 20 or your 40 points. So it's not a big deal. So what the guy would teach me how to do is how I got hooked on trading is I watched a guy make $32,000 in 18 minutes just sitting here going buy, sell, sell, buy, sell, buy, sell. And I was like, man, you got to teach me how to do that. That's amazing. This is what I'm about to show you. It's kind of a little bit of the lost art and science of order flow and tape reading. It is a little daunting to learn at first. It's not for everyone. I will tell you, this is not for everyone. It's probably going to look like a little bit of a magic trick when you see how it's done. It's not a party trick. It's actually a skill that you need to learn. So the first thing that you have to know is there is a way to read the price action in the tape that will increase your odds on your entries and your exits. So the first thing is you always want to have a chart of some kind that you can kind of cheat off of. When I was originally taught how to trade, all that I was given was this right here. I was given this right here and this alone. And I was taught how to trade where I got this right here. I got the bid, the ask, the last, and the net. And I was told to stare at this. And I would stare at this hours upon hours, day after day, month after month, year after year. And I would figure out that, hey, there was a seller that just came in at 122. They had a 17 lot. And now it's trading at 122 and it's stuck at 122. 16, 122, 122, 122. We're stuck at 122. 122, we're stuck. Oh, got a little bit up here at 23. A little bit up, just a one tick up tick. We've traded 2, 4, 6, 8, 10, 12. Okay, we've got about a dozen or so, about 15 orders here at 23. We've got a little bit of selling, a little bit of buying, 23. And I would have to figure out in real time whether it was going higher or lower, whether it was getting stronger, weaker, or about the same. Stronger, weaker, or about the same in real time. Okay. No Ichimoku cloud charts today. Today I'm teaching you market internal, so it's a different type of talk. So that was how I was originally taught how to trade. And the guy would start printing off pictures with his hand. He'd be like, "Here's what I'm looking for," and he would always call me. His name was Jack, and he would always call me Hubes. I don't know why, just a nickname. And he'd say, "Here's what I'm looking for, son." And he would show me what he's looking for with his hands moving up and down. I'd be like, well, I don't understand. So first, let's bust a few myths. If you're looking at this stuff, if you're looking at, let's take a look at this. Let's take a look at the U.S. I need a little bit more movement in the market. Let's look at this one. All right. So notice here in the gold market, do you see everybody kind of jockeying for position here? And it says here's an 18 lot, 13 lot, 15 lot. You see how these numbers are, everybody's kind of jockeying for position because it's moving around? Does everybody see that on the chart? This is what we call dome, depth of market. You can do it. I highly recommend Jigsaw. So you can a lot of this stuff right here is liar's poker. And I'll do a lot of this. I will actually misrepresent what I'm wanting to do in the dome and do something entirely different. You can do it with what we call iceberg orders. So you could have a 3-lot and say, hey, as soon as I get my 3-lot order filled, fill me 30 more. Or I want to show that I have a 10-lot, but I really got 100. I got 100 contracts behind this thing. So as soon as you fill me on 10, I want to go market at 100-lot. And you can also say, hey, I know I'm saying I really want 20 lots down here. As soon as that gets to the 20-lot, actually come over here and sell me 100 on the ask side. So a lot of this stuff right here is just because it's on the bid column doesn't mean it's true. Just because it's on the ask column does not mean that somebody actually wants to sell. A bid is not a buy, and an ask is not a sell. It's an implied buy or sell. In other words, it's a negotiation. It's a real-time negotiation, and the terms of that negotiation and the people's and the people's, what, I'm trying to think of the word, commitment to their position can change. In other words, they can change their mind really, really quickly. Like, I know I thought I was going to buy, but I really want to sell. So don't pay so much attention to dome, depth of market, or matrix. Here's what you should pay attention to. You should pay attention to what's going through the cash register, because although depth of market and matrix will tell you what people are wanting to bid and ask for, really what's important is what did they really do? What really went through the cash register? Okay? So when you're looking at the cash register, this is what really went through. So you can say, hey, I saw somebody wanted to buy 20 at 121. Well, yeah, really, he only got one. Or maybe he wants to sell a little above or below the offer, or above or below the ask. Now, there's another thing that I use in conjunction with this thing called time and sales. You can also filter this thing, and you can really do a cool little trick here. You can go right-click, you can go copy window, and then you can go right-click, and then you can go paste window. And then what this will do is I can then filter out anything. Then I can go right-click and go Format at YM, and I can come in here and I can go, okay, I want to see trades greater than or equal to 10 contracts. Okay, so now what I'll see on this side is everything on the map, and then on this side I'll see anything that's 10 contracts or above, and then we're like, okay, there's no 10 contracts, and it's different for every market. What you can do is you can say, okay, maybe I don't want to see anything 10 or above, maybe I just want to see anything above 5 contracts or above, and then you can see, okay, is there any orders coming through here? And right now we're right in the middle of the doldrums, 124, so there's not a whole lot of movement, but that'll give me only 5 lots and above will be printed on this side over here in order to show that up. Okay? Does that make sense? Over here is everything, and over here would be 5 contracts or above. That's how that works. So let's get into one more piece that I use to help me with entries and exits. This is the part that'll probably freak you out the most. I'm going to pop some audio into you really quickly, and just listen to it for a few seconds, and I'm going to show you how I use this next tool. It's kind of slow and quiet.
I'm at 36 happening here now, and I'm at 37 here now, guys. We have gold here now, which is about to close out. It has been bid all morning here for you guys. Again, gold here now at the 13.17 level. I'll have gold pit levels here for you guys. I'll have highs and lows and a close for you here. Once gold closes out here, that's going to be in just 5 minutes here, guys. Once again, here now, I do have levels here for you. We're talking here now about gold. Gold here, ladies and gentlemen, going out here now in just 5 minutes. 6 half bidding on them at 7. We are 836 half bidding on them at 37. Again, here now we will have levels here now for you guys. We'll have gold levels here now for you once we get a pit close here now for you. But right now, I'm watching here now as we have in here now and continue to be watching shop trade. Six half bidding here now for you. These are locals here now. I'm at 36 half bidding on them at 37.
So you can hear it's a little slow right now in the pits. Usually during 11:30 to 2:30, it's a little quiet. Okay, so Pac-Man says I heard a well say that time and sales is smoke and mirrors. Well, time and sales is not smoke and mirrors, but definitely Dome and the Matrix is. Time and sales is actually what went through the cash register. It'd be like you going to a store and saying, hey, I just paid for that, but really my money doesn't count. So all this is actually real. It's what goes through the execution screens, okay? So let's go through, and I want to show you how to use, until you get good at reading time and sales, there's a trick that I can show you so that you don't have to spend years at a time staring at time and sales. What you're going to do is you're going to compare the tick to the price action. So I want to show you an example of how this works, okay? So first, let's go through ticks really quick. So on the tick reading, what you're going to do, tick, here we go, ticks. On the tick, let's compare this to the Dow, okay? All right, here we go. So this is a 1 minute, and you can do it on a 1 minute, 2 minute, or whatever you want to. What you're going to do first when you're looking at the tick reading is I recommend that you use a 1 minute tick reading, and I recommend that you put a line on close on that, okay? So when you're looking at my screen, does everybody see the tick on the bottom? Yeah, that same stuff. Total view and level 3 still, it can be manipulated. So what you're looking at, the first thing in the morning that you're going to do with the tick is you're going to have a 0 line right here on the tick, a 0 line. Let me do this. There's a better way to do this. Let me do it with this one right here. This was today's action in the tick, okay? So when we opened up, and the tick rallied and put an intermediate high in at 460. Do you see this right here, 460? The market opened up, we went up, topped out, and then we had an intermediate bottom that kind of put in right here from about 9:30 to 10. So that's going to be our overall range. So if we know this is the high of the tick and this is the low of the tick, we now know that we have a baseline to deal with for the day. Now this baseline is always going to be different for every day. For today, the baseline, it started out there and then we went a little bit higher, so we had to adjust the baseline to be about that. So it's going to be, the high baseline of the ticks today is going to be about 740. You can see how they've topped out there. And the low baseline is we have a little bit better baseline here at about 502. Do you see that? Where you can see that you've got some support here and you've got some resistance there. So now what you're going to do is you're going to use this as your RPM gauge for the market to time things. A lot of people will tell you incorrectly that they'll say, all right, if the tick is not at least above or below 600 on the day, it's usually slop and chop. And that's not really a great explanation of the tick. The tick is the number of stocks ticking up divided by the number of stocks ticking down in any situation. So what you're looking for is in the RPM gauge of the market, if you know that you're slamming down here in the lows, and if you know this is the high, and if you know that the tick for the day is experiencing more price action above the 0 line than below the 0 line, then what you can do is you can gauge in real time what this thing is doing and what it's telling you. It's basically the market's way of whispering in your ear and going, okay, here's what I'm doing. I'm about to go higher. So what I'm going to do is, even though it's a little slow and it may be methodical, this will be a good example of what you can do with the tick. They're buying in the pit right now. Do you see the ticks hooking up right here right now? Do you see where it's trying to go higher above the 0 line? So what you would do is in a normal situation, then you would gauge. You could then gauge the market. The market should go up now. See how the ticks are going up? See how the price action? The price action should be bouncing up for you a little bit now. See how it's bouncing up on the Dow right now in a 1 minute? So now we're going up. We're at 308. We're at 300. Where are we probably going to top out on the ticks at? If we know that that purple line is our overall resistance for today and our overall support lines at 502. Right now we're at 372. Where are we probably going to gas out at? Where's it going to gas out at? All right, so we're going higher. Right, so we're probably going to run into a little resistance around 740. Does that make sense when you're thinking about that thing? Now, you can use other indicators for follow-through, like I use the climactic volume on the bottom. All right, a little bit of size coming through in the S&P. I'm listening to the pit while I'm doing this, and you can see, all right, we're continuing to ramp up a little bit. So I'm going to show you a real good trick, or a tip in a trick, like tricks of the trade, that you can do to gauge this to increase your entries and your exits in just a second. First, I just want to show you this. When do you set that range? The range sets throughout the day, and the range will expand and contract throughout the day. So you start first thing in the morning. So now you see how the ticks are rolling over? You see how the ticks are kind of topping out again? The ticks are topping out here. We need them to go to 740, and then that would give us a new high here in the Dow. You can see you got a little resistance here at 33. There you go. Popping up. Popping up. There we go. Now we're starting to move a little bit. Now, the Dow, the S&P, and the NASDAQ are kind of famous for, false breakouts. So you got to be careful with the breakout side of things. And you can confirm this. Is it going to break out, or is this just a false positive? The white line on my tick chart. So here, you guys want me to show you how I construct this chart? It's really easy. How I construct this chart is I just put a 1 minute line on close, a 1 minute line on close, 1 minute line on close, and then I'm just putting a 1 period moving average. So when I format that, all that line is a 1 period moving average, so that it'll show me the overall line, the tick line. So you can see I've got, it's just a 1 period moving average is all that is why I'm doing that. And what I'm looking for is, after I get my range on the day, and I know my range is, here's my low range, here's my high range, then I want to start looking for tick hooks, okay? So let's go with the most recent little price action. And what you're going to be looking for, since this is the RPM gauge of the market, what you're going to be looking for is hooks after a move. So we're hanging out here at the high of the move on the day. Is the tick confirming this, or is it not confirming that? So I'm going to show you how I put this line on here, so everybody can do it on your own platform, and you can have the exact same lines I have. There's nothing magical about it. All you're going to do is go right click, and then it's insert analysis technique, okay? And then after you do that, all you're going to do is just going to go moving average, one line. I'm going to hit OK. I'm going to format it. Usually most moving averages are set to default. I'm just going to do the input. I'm going to set it to 1, and then I'm going to hit style. I'm just going to make it a little bit thicker so I can see it. And the color, I just want to make it bright white so I can see it. And then I'm going to hit OK. So now I have a bright white line on my tick chart, and I can now see the ticks are hidden behind that white line. I want to be able to see a high-low open close on the bars, but this visual hooking is really good to see so that you can see if the ticks are ramping up or slowing down. So here we go. So now, looking at this, look, ticks are about to ramp back up. See how they're trying to hook up? So this is when I'm talking about a hook. What I'm looking for is that type of movement, and I'll show you on here in just a close. If this thing hooks up and it looks just like a little check mark or a little hook, this is what would be considered a tick hook. You see this right here? You see that tick hook? These are hooks to the high side. These would be hooks to the low side. Right there, you see that hook to the low side? It just looks like it's peaks and valleys. Okay. All right. Now, on the tick reading, the 0 line is very important. It's always your line in your sand to tell you that that's going to be a good support or resistance area. So notice that we went from plus 500 all the way down to the 0 line, and we started hooking up. Do you see that? How many points did you move on the Dow from its most recent high to its little pullback right here? How many points did it move? From 133 to 130, that's 3 points, right? But the tick moved from 500 down to the 0 line. So it moved 500 ticks, but it only moved 3 points to the negative. Do you think that means that the Dow is going to move? Yeah, a good 3 points, right? So do you think when the ticks start to turn up, is the Dow going to go higher or lower? In other words, you're gauging this in real time. Is the price action strong? What's the tick telling you? And you're going to compare these two and contrast them all day long. And you're like, all right, the ticks are basing out here at 0. If the ticks go below the 0 line, my price action will probably go a little bit lower. But if it stays above the 0 line and starts ramping up, then my Dow will probably go through that 133 area and head to 140. So I couple that with the center column and the program buying and selling, and I also have the pit going on in my ear, so I can hear what's going on. Yeah, and so what this whisper in my ear going, hey, I'm going higher. I'm going to go higher, heads up. So here we go, right? So there's nothing magical about this. I promise you there's not. It's just good old-fashioned hard work and just studying the tick and the price action a lot. So now, if we hold the zero line, and the tick starts ramping up, the price action on the Dow will jump up some more. Yeah, this method works good for the S&P, NASDAQ, and Russell. It works across all the index futures, yes. There's actually a tick queue, but I don't use it. Or I think there's a tick queue and a trend queue. I never use them though. I always just use the regular old tick. What's the difference between the range and trending on the Dow and S&P? What's the difference between ranging and trending on the Dow and S&P? I'm not sure what you're asking. I will tell you for every 8 to 12 points that the Dow moves, the S&P will move 1 point. So look at there. So now you know a way to tell you when a market is about to bounce, whether it's the Dow, S&P, NASDAQ, or the Russell. And blow it up here for you again. And now you have to realize, like, right now is a really slow market and a slow time to teach you how to do this. Is time and sales called level 2? No, time and sales is this. Time and sales is what actually went through the cash register. Level 2 is just the bid and the ask. Time and sales is what actually went through level 2. Level 2 is what people are lying to you about. Any tricks for the 6E? The 6E you can read tape, which is a little harder to do. It would take me several hours to teach you how to read tape, but this is a really cool trick of the trade that I can teach you fairly quickly so that you can do some really good entries and exits. Yeah, the time and sales are the field orders. The matrix or the level 2 are the negotiation. Got a little local on both sides, local market. Yeah, the volume ladder is the bid and ask, matrix, dome, and all that good stuff. So, all right, now check us out. We're starting to ramp a little bit lower here on the ticks. The ticks act like they want to go below the zero line. See how they're acting? They're like, man, I'm getting really, really tired. And the Dow's going, I don't care how tired you are. I'm going to stay up here for a little bit. Oh, cool. Yeah, did you help out as much as you can, man. I appreciate that. Where do you get or determine the numbers on that chart? All right, so let's go over that. Let me get a drink of water here. I got about another 23 minutes, and we'll kind of elaborate on that type of thing. All right, first off, let me make sure that I'm going in the right direction for you guys. Does this hurt or help you guys? Are you guys confused, or am I going down the right trail for you guys? Because I can pivot and teach you something else, but I think this is the most important stuff. All right. Freak out on me. It's not for everybody, but when you're doing this stuff all live, it's a lot better than PowerPoint, because PowerPoint, you can make PowerPoint look like anything, right? In PowerPoint, I could just miraculously lose 100 pounds, right? All right, so let's go through some of the areas on the tick that are important, okay? A little confusing, but interesting. All right. So first we covered the program buying and selling. Crystal clear, right? Program buying and selling, you don't really have any questions on that. If you can understand what a buy is and a selling is, you got that. The trend trade, you're just going to wait till it hits 1.50. You're going to be a buyer with a stop and a target, right? On ticks, the ticks are the RPM gauge of the market. Now, let me turn Ben down just a little bit here because I'm actually participating in market moves while I'm doing this. So I'm gonna cover up time and sales altogether, and we're just going to compare and contrast the tick really quick. So the first thing you want on the tick is a zero line, okay? And I'm going to take these lines off here too, okay? So the lines that I think are important, at a bare minimum, you need these. You need the zero line. Excuse me, I've been talking all day, sorry. You need the zero line. You need a plus 1,000, and you need a minus 1,000. Now, the reason these are very important is at any time, if you get a plus 1,000, you're going to short things up there. If you get a minus 1,000, excuse me, God, I'm going to have to, let me hit a mute button here and just call. Oh, much better, much better. All right, look here, nosedive. Look at the ticks. You see the nosedive that the ticks just went? Ticks went from 0 down to minus 448. Do you see that? What's your price chart doing? Is it going anywhere? It's not doing anything, is it? Is that good or bad? If you wanted to get long the Dow, where would you get? Oh my! This is a trade that we could actually do here. So if we know that we've got, that's a good thing. So we know that the low here on the support on the Dow is in this zone. Do you see these little areas that you can kind of flesh out? Like that looks like they've got a little bit of support there. So if we get a sell-off in the ticks, but if our market doesn't move much, right? If our time and sales doesn't move much, then what you would want to do is you'd want to come over here and go, okay, Dow, that looks interesting to me. And you'd come over here and you go, okay, Dow, YMH14. You go, okay, it should be selling off. It's not yet. And you can time it, and you could say, okay, when this thing starts to hook up, I'd want to get long. So now this is right in the middle of the day, and I usually never trade between 11:30 and 2:30, but I'll show you as an example. You see how the ticks came down here to their support area that we just figured out was support because this is the range that it has given us. You see the range that it's given us throughout the day. It's bounced pretty good off of those levels. The ticks are starting to hook. See how they're starting to hook? There's two different places that you'd want to do it. Tick hook 1 or tick hook 2 after a good little sell-off like that. So then we could come over here. We could go to the Trade It tab, and we could go, okay, give me some Dow, please. And we go, boom. All right, we're on the Dow. I'll use about a 10-point, 20-point stop here just to show you this example. So now I'm in the Dow. I've got a target up here, higher somewhere. So I'll be okay. There's my higher target. I'll show you what you can do with this. So it's either going to stop me out, and I'll lose a little bit of money on this example for you, or it's going to hold. Now I'm going to flip back over here to the dashboard. So now we're long down here in this area, right? We're long down here in this area because we had a sell-off in the ticks, and the price action finally followed it along, and then we're trying to let this thing bounce up and hook up on us. The first tick hook is the most aggressive, and it doesn't work very often. The second tick hook is the most conservative and works better than the first one. So on this example, I'm showing you the aggressive trade as it's hooking right here. You see how that hooked up right there at minus 514? Because we had that pegged as some support area, right? And then we're like, okay, now where are we potentially going to bust our head on? Well, the 0 line will be our resistance area. All right, so then we're going to come over here and go to the Trade It tab, and then what you can do is you can then flip out of that on the position. So we need a little bit harder bounce for us. But if we don't climb above the 0 line on that, then we need to jump out of our trade because we're betting that the 514 area holds and it comes up to the 0 line and then maybe even goes back up to our intraday resistance area. What is our intraday resistance area? Let me make sure I got it pegged right. That would be the internal one. This one would be the external one. Right there. You get where I'm seeing that at? Like you got a nice little resistance area right in here. You see all the resistance? Okay. Now, it's starting to ramp up. We're at the 0 line. And we hook back lower. So we got to be careful with the trade setup. The tick is based on, a tick is based upon the number of stocks upticking divided by the number of stocks down ticking over all of the up. You can see the price action at 16,128, 127, 126, trying to ramp up here. The ticks have hooked over. Okay, so remember this is tick hook number 1. Remember when I said it's the most aggressive one? It's the one that'll tend to kind of just not do well for you sometimes. Well, we almost have a second tick hook. We're not there yet, and as soon as we get there, I'll show you the second one. But I showed you the first one as an example. It's aggressive. As soon as we get there, I'll move these two, 1, 2, right on top of each other, so you'll see the second tick hook. Do you also use the vol spread? I don't use the vol spread much, no, because that thing can be manipulated. The VIX and the vol spread can actually be manipulated a lot. What indicator do you use for daily program trading range, and is it on for the daily program trading range? For program trading range, I don't use an indicator. I just use the program trading website, and it's ESINX. For this, I'm Is everybody following this example? Yeah, this is a scalping method that requires little to no indicators, correct. Do we understand what I'm doing? Okay, all right. Market's slowed down a lot. We're not going anywhere here. The ticks are kind of just basing out here. We need to ramp back up. So that's how you kind of massage an entry. Can any of this be applied to stocks? Yeah. I mean, if your stock follows the market, and a lot of stocks do, there's a direct correlation to doing this very same thing in ETFs and in stocks. Why even show time and sales? Well, because I use a lot of time and sales because I can actually trade just off of time and sales and not use the tick. So for me, I'm just an old veteran that can just sit here and stare at this stuff and go, okay, I want to be out at 130. Okay, I want to be in it. I want to be in 126 and out at 130. Just because I'm just a good old fashioned tape reader, so I could do that. And I always use that in the center of my charts because it's really easy for me to do. Yeah. Very clear. Who told you this? Who told me this tick? I don't know. I just picked it up over the years. All right. So we are going to see what else we got going on here. Anything else going on in the markets? I got about 15 more minutes to teach you. Check the trade here. So we're still doing okay. Now what we could do is we could bump up our stop to break even so that we couldn't lose any money, potentially. We could do that, but it's a really tight trade right now. We're probably just slightly down on it. So we'll just bump this up, and we'll just do it right here. We'll just say we'll bump it up so we could potentially lose a tick, okay? So worst case scenario, we lose one tick on this trade. And we'll just see if it'll go up for us. And we'll just see how it acts, how it kind of turns out for you. Okay? And if it goes below the zero line and then rolls back over, we still haven't had a second tick hook. I'm still trying to find it for you. And what you want is another move up. And it doesn't matter if the second tick is higher or lower than the first one. It really doesn't matter. What matters is that it actually is happening. Didn't the climactic in just a second. Climactic volume. Let me finish this explanation, then I'll see if I can spend some time on that with you. But like I said, I could do an entire class just on teaching you how to do the tick for hours at a time. So it's a really cool market internal that if you've never used, you should definitely use. All right. All right. So let's go through. I'm going to blow this chart up just a little bit too so I can show you again. I'm trying to find that second tick hook so I can show you. So here's the second one. It's trying. You see where it looked like right there? Right there and then right there. You see where that one trying to hooked up and then it went lower? So that would be the first one, and then that would be the second one. So right in here, it's like if you missed the trade, you could go ahead and do it there, or you could do it at the zero line. So here's what you're basically doing. You're basically letting the market tell you on any given day where its range is at. And it's kind of like waking up to, the market and going, all right, what do you want to do today? Not what I want to do, but market, what do you want to do? And the market goes, well, here's what I'm going to do. I'm going to right out of the gate, I'm going to go pretty hardcore up. I'm going to bounce right out of the gate. I'm going to go positive on the ticks, and then I'm going to give it up. I'm going to go below the zero line, and I'm going to slam down here into this. I'm going to slam down here to minus 740 ticks. And you're like, that's interesting. Okay, so now I know my external low range, and I know my external or my internal high range. And then you just adjust it throughout the day, and you go, okay. So now I've got some areas here, and all I do is I just blow the chart up like this, and I go, okay, where are the support and resistance areas on this chart? Because I never have these on the chart yet. All that I have on the chart are the zero line, because I always want to know if it's above or below the zero line. And then I want to say, all right, market, where are you bottoming out at, and where are you topping out at? And I go, okay, well, I look like I've got some decent we've got some decent resistance right here. Does everybody see this? I mean, I can't be the only guy that sees this. Do you see this big swath of resistance right there? Does everybody see that? So that's going to be the internal range of today's ticks, okay? And then the external range of today's ticks are going to be about right there, right? Okay, so where's going to be the internal range of today's ticks? The internal range of today's ticks are probably going to be, that looks about right, right? Because you're hitting a lot of those little peaks and valleys. So now what we do is we've got an area of where the market says it's going to perform. Now, it's an area. It's not a pinpoint accurate area. It's a zone. It's like, okay, we want to be buyers down here or sellers up here. And you're always going to use that zero line. You're always going to use that zero line as a good teeter-totter point, right? So now, what should we be doing in our trade right now? We're at our internal range. What should we be doing? Here's what we should do. We should go over here to the trade and go, okay, thank you, ticks. I appreciate that. Boom. Close it out. Now, did we make a massive amount of money? No, but we have a really sucky range right now. It's right in the middle of the day. Did we risk a lot of money on that trade to make just a little bit of money? No, we didn't take a whole ton of risk. The reason we didn't have to take a whole ton of risk is because we bought at the bottom of support and we sold at the height of resistance in the tick. And this is a slow market. It's hard to trade a real crappy market that's just going up, down, up, down, up, down, up, down. So that's how you do it. It's pretty simple. It's similar to value charts. It's kind of like a value chart approach. It's just internal. You just have to remember, like, the ticks are different every day. So what you have to do is you have to be willing to do a little bit of work and go, okay, this is the range that I've got established with the ticks, and at any time it can get happier or it can get sadder. In other words, it can go crazy and want to go a lot higher, or it can go crazy and want to go a lot lower. So magically, just like the little magically delicious, look where we stopped at. Where do we stop at? Kind of weird, right? That's about where we thought it was going to stop at in the first place. Right? How and when do you use the external ranges? Well, if we break outside of the internal ranges. If people focus on extremes, they won't have many entries. That's right. So if you focus on only plus 1,000 and minus 1,000, those are good trades too, and I do a lot of those. But those don't happen as often as this methodology or this strategy and tactic that you can use. So if we go past this, if we blow past our internal range, then we're probably going to stop at our external range. And we know we've got hard extremes at, minus 1,000 and plus 1,000. We already know those. The second hook can either be higher or lower. That is correct. So yeah, let's walk through a little bit of example of that. So when we bought down here, so first the Dow was trading high and tight when it topped out, right? And then it sold off. The tick sold off, and as soon as the tick sold off into our support area, it hooked up at the support area. We bought it there. The second tick hook was right here. You could have bought it there and been just fine too. Usually, in my experience, the second tick hook is a little bit more conservative, but also a lot more reliable than the first tick hook. So if you wanted to do another one, you could. You'd probably be pressing your luck. You're right in the middle of lunch hour. I mean, you got about another 30 minutes before trading starts to really ramp up again. YM was at 0 when it broke out. Yep, when it went above the 0 line. Yep. But even with the chart, there are plenty of opportunities based on extremes. Yep, you could definitely do that. How did you get the 0 line, please? The 0 line is just the 0 line. All I do is put a horizontal line on at 0 because the ticks have a numerical value on them. They go 0. They have a finite range to them. So extremes, when you see a crazy amount of buying, is plus 1,000. When you see a crazy amount of selling, it's minus 1,000. And they're usually reversal points, unless it's just followed up with a lot of follow-through and follow-up. All right, so I have got 7 minutes. So what I want to do is I want to give you the opportunity to learn more. If I can figure out how to do that, because I don't even know where my PowerPoint is. So here's what I'm going to do. If you guys want to learn more about what I just showed you, I'll give you the opportunity. I've been doing a market internals class, and I charged just the other day $297 for it. I've got, I think, 3 or 4 recordings. It's not the entire class, but it's a portion of the class. Okay, and if you want, I'll give it to you for $97. And it's basically everything that I taught you in more depth and in a lot more time spent on tape reading, order flow, ticks, trend, all that good stuff. Normal price is $297. Like I said, I'm doing a class right now that people are going through at $297, and what I'm doing is I have pulled out sections of that and put it in your special discount offer. Where I obviously can't give you the same class I gave somebody else for $297. But what I'm doing is I'm pulling out videos of that and sharing those with you. Okay, so it's $97. It's only for the first 100 people. You can go to hubertcenters.com/tape, or you can call the office here, area code 859-963-3445. I will open it up to questions. Do you know how to set up your teachings for Ninja Trader? I do not know how, but Lord, it can't be that hard. Heck, if I can figure it out, anybody can. My broker is useless, but yes, it should be able to take perfect work. That's funny. Hubert, fantastic. Can you share a bit about how the tick can be used as a institutional buying and selling indicator? I wouldn't use the tick for institutional buying and selling. I would probably use the ticky or the tick eye for that. Is what I would do in that situation. Yeah. I would use program buying and selling for institutional buying and selling is what I would use. It's a way better way of doing it. How to put the tick on TradeStation. You just put #, TICK. You just have to be permission for it, Jason. It's not very much. I think it might be $10 a month or something. Do I have an Ichimoku Cloud class? I do have an Ichimoku course called Ichimoku Cloud Charting Secrets. Yes, I do. You guys can ask me anything and everything you want. Like I said, the tape reading and order flow, basically, if you like the information that I just shared with you today, what I go, let me see. Hey, Jared, how many hours is the course? About 4 hours. Jared says it's about 4 hours of video that you'll be able to watch. As soon as you place your order, you'll be able to watch me do what I just did in front of you for about 4 hours. So, yeah. And it's really useful and really helpful. And like I said, it's not going to be for everybody. So not everybody's going to be into it. But obviously, if you trade a lot of the Dow, S&P, NASDAQ, Russell, or any of the stocks that follow along with those futures, it's pretty useful. So Morgan is nice enough to put the link up there. You can also call my office. My team is standing by. I can hear him taking orders behind me. I really appreciate that. Thank you very much. And here is the telephone number if you want to do that. Do you have to subscribe to your services to get the... No, you don't have to subscribe to any of my services to get the 1.5 or the 4.0. You may have to pay your data fee, maybe $5 or $10 to get the ESINX. I think TradeStation's free. I think TOS is free too, but I'm not sure. And it's gold for Hubert. Let's see. Thanks. Does this include ESINX? Yes, it does include ESINX, yes. Can you do any of this on a less sophisticated charting platform like Schwab? Peter, I don't know. You'd have to call Schwab and see. I know you can do everything that I just did in front of you on most trading platforms like TradeStation, TOS, eSignal, Ninja, Sierra, all the big ones. I know you can do that. How much is your crude and gold trading? I have you can just call the office. If you're interested in the other courses, you can just call the office. I think I've got a course called Gold Trading Secrets. It's different. So yeah, you can just call the office for all those other ones. I think 400 or 500 or 900. It just all depends on what trading. Sterling, you can't really use this on Sterling. You could use tape reading on Sterling as long as you're using the currency future, right? Is the ESINX the same as SPINX? No, the SPINX is the big S&P and the ESINX is the mini. So there is a difference. It's about a half a second faster than the SPINX, William. So make sure you use the ESINX. It's faster. Hey, Hubert, long time see. You still working with JC? I am still a shareholder of Trade the Markets, and John and I are still partners, yes. How much is crude? Go trade. Do you explain details of time and sales? Yeah. On the 5-hour course, I actually go through at least 2.5, 3 hours of teaching you how to read time and sales, which is the art and science of reading tape and order flow. So yes. What market does the tick represent? All of the stocks traded on the NYSE, the number of stocks upticking divided by the number of stocks down ticking is what that would be. Let me see here, Sterling. How much is it? I'm hearing two voices. Climactic volume. I don't have enough time to do climactic volume because I only have 53 more seconds. If you guys want on the next webinar that I come in and do with TradingPub and Morgan's group, I will explain the climactic volume indicator if you want me to do that. I'll spin. I've got a whole presentation on that. I just didn't have enough time to go over everything. Well, I only have an hour or so, so I can only do so much. Sorry. But I'll do it next time. HS, oh, thanks, appreciate it. Can you make a living? Can you make a living learning that trade? Doing scalping? I mean, that's how I learned how to trade in the beginning. That's how I spent my entire career, was just doing what I just showed you for the first 3 years. So yes, thank you very much for having me. I appreciate it. Here's the link once again and the telephone number. If you guys want to take the course, it's already re-recorded. You're ready to go. As soon as you hit the buy now link, add it to your cart, you're good to go. Morgan, thanks for having me, and I'll see you on the next one, guys.
All right, great. Thanks, Hubert. We appreciate you being here. And again, guys, the link, if you go to this link real quick, I'm glad, yeah, lots of good comments coming in from that. It's hubertcenters.com/tape, T-A-P-E. So again, hubertcenters.com/tape. We've got started this morning at 8 a.m. Eastern. It's now almost 2 p.m. Eastern. So what I tell you what we'll do, we're going to take a quick little and grab a cup of coffee. I know probably got a lot of people signing up for that as well, based on that presentation Hubert just gave. So give you guys some time to do that, and then we'll start fresh for our next presentation. So I'll put a timer up there, and we'll get started in about 3 minutes for our next presentation.